Why is there a D next to my investment today? It's because it's dividend payout time. And while the markets have been down, some may only be focused on all of this red they're seeing in their portfolio. But my dividends rolling in are a reminder that investing returns don't only come from that share price going up. It comes from ownership, getting those dividend payments for holding these positions in your portfolio. Today, I'm going to be giving you an update on my investments into the S&P 500, both through FXAIX and VOO. And just a few months ago, when I gave my 2025 update, my portfolio was up about 65,000 in gains. 2024 and 2025 were pretty easy years, but the story is different right now. We've got a pullback. The headlines are focus on the conflict, oil prices spiking, those big tech companies cooling off, and investors feeling very uncomfortable. These are times when real investors are built. Before I share my results, I want to touch on why I have two investments in my portfolio that give exposure to the S&P 500. VOO, the Vanguard S&P 500 ETF. I have this in my taxable brokerage account, the one that gives me flexibility that I can tap into before the age of 59 and a half, playing the same role, a core foundation anchor for my portfolio. And I also have FXAIX, the Fidelity 500 index funds, in my IRA over at Fidelity, strictly for retirement. Looking back to my update that I shared back in January of 2026, my VOO was up about 46%, a gain of $4,000, and my total portfolio value was $12,765. I had 20 shares in my portfolio with an average price of $435.61. Today, my portfolio is almost back to the point where it was back in January. I'm currently up 44.64%, a gain of $3,900, and my total portfolio value is $12,690. 20.1 shares, average price $436. And back in January, when I was doing my 2025 recap, FXAIX, I was up 50.71%. A gain of about $60,600. My total portfolio value was $180,170. And in my last update, I was at 49.14 shares. Now, today, just like VOO, I'm almost back to the point where I was back in January's update. 751.5 shares, up $5,800, 49%, for a total portfolio value of about $178,000. So overall, I'm down about $2,600 from my last update. This is not the first time I've seen my portfolio have huge fluctuations like this. Now, here's the lesson. Investing is not about luck. It's not about gambling. What I'm building here is from me being consistent, dollar cost averaging, staying invested, reinvesting my dividends, understanding what's going on in the news as well as the economy, but not being fearful, and letting time do the heavy lifting. As I always say, that magic, the power of compounding going on in my portfolio. If you're newer to investing, I want you to know you can have great results by investing into something that you might see as boring and then being patient and consistent in building up your position. These are two low-cost funds. VOO has an expense ratio of 0.03% and FXAIX 0.015%. Both cost-effective ways giving you exposure to these top companies: NVIDIA, Apple, Microsoft, Amazon, Google, Broadcom, Meta, and many more. It's a fund that's weighted by market cap, and the weighting of those top 10 companies is 36% of this portfolio. And because of what's currently thriving with the highest market caps, it's being led by technology, financials, consumer services, and consumer discretionary. So I was waiting for my FXAIX dividend to come in before I shared my Q1 update. If I had done this update just a couple weeks ago, you would have seen more of that severe pullback that my portfolio was hit with. And it might happen again. The market moves in cycles, and on top of that, we're dealing with all of these geopolitical tensions. This conflict is impacting major oil shipping routes, and the rising oil prices are increasing the inflation pressures. High inflation, delays to those rate cuts, borrowing costs are high. We're seeing all of this volatility in the stock market, making investors cautious. We've also seen some of those S&P 500 leaders cooling off. Names like Microsoft, Tesla, and Nvidia, when they pull back, the index is going to feel it. But we have to, like I said, connect this to what's going on with the tensions that we're dealing with right now. Price weakness does not necessarily mean that the business is weak. I'm invested into all of the Mag 7 in addition to my S&P 500 investments. While stocks might be taking a breather, their business can still be strong long term. So I'm not going to shift my investments, sell out of these positions because of short-term volatility. I'll just be staying on top of what's going on with the company, what the future holds, what steps they're making, like Meta laying off 20% of their workforce. Why is this? They're striving for AI efficiency. They're cutting costs like so many other companies. And I'm not just feeling this pressure in my portfolio. I'm feeling it at the grocery store, at the gas pump, my utility bills, my insurance premiums across the board. But it's not turning me off to investing, and it's not going to tempt me to make poor decisions. Historically, pullbacks happen, and historically, the S&P 500 always recovers. The market's not broken. We've gone through war times before, and so we have to be ready for the market to do what it's always done: reset and continue growing over the next few years. Like I said earlier, 2024 and 2025 were easy. The market hitting all-time highs over and over again. I'm striving to stay strong, stay consistent, and patient. Reflect back on history to know that I'm doing the right thing. I'm not going to be shaken out of positions that I've done my research on, I've incorporated with intention. My strategy hasn't changed. The market goes down and the market goes back up. I'm not adding to these two positions currently, but with many others, I've taken this opportunity over these last months to put in the work when the market is down. Now, let's take a look at the dividends. Both of these investments pay a quarterly dividend. They do vary from quarter to quarter. My last dividend payment for FXAIX was $500.63, which helped me to add 2.114 shares into my portfolio. And for VOO, my last dividend payment was $37.55 based on the number of shares that I was holding on that last dividend payout date. A couple of reasons why the dividend payments fluctuate when it comes to these 500 companies in this index is because different companies pay their dividends at different times. The dividend amounts may change based on their earnings and other factors. Companies could be swapped out of the fund. So basically, the fund is going to pass on whatever it receives during that particular quarter. I'm a long-term investor, so I see things clearly. I might see things differently. Even when the market is red, it's still paying me. I'm still willing to build into those quality investments that I want more exposure to. More shares for more dividends down the road, as well as long-term growth from the share appreciation. Now, beyond my core positions like VOO and FXAIX, I'm incorporating other ETFs like SMH and SPMO, the VNEC Semiconductor ETF, and Invesco's S&P 500 Momentum ETF. Growth positions that are not going to move the same as my core positions. And that's not a bad thing. It's just a different risk level that I'm willing to take on in smaller allocations for the growth. But I always know that I have the stability and strength from the way that I'm building my portfolios. I added VOO into the chart with SMH and SPMO, and you can see they're all in the green. VOO just slightly at 0.89%. SPMO is up 4.71%, and SMH is up 23.11%. So overall, my update slightly down over this last quarter, but we understand why. The market is down, but my plan is not broken. I've been through volatility on the market before. I've done my research. I've looked back to those tough times like back in 2008. I have an understanding of the market recovery. And so my discipline is not being tested. I'm staying consistent. I'm staying invested. I'm still building. So stay informed when it comes to your investments and just realize that every year is not going to be as easy and exciting as 2025 was. I want you to remember that wealth is built in the red and recessions make millionaires. Now, I'd love to hear from you. Make sure you leave me lots of comments. What have you been doing throughout 2026? Have you been buying the dip? Are you building? Are you holding? Were you waiting for lower prices? How are you getting exposure to the S&P 500 in your portfolio? What areas are you hitting? Growth, dividends, some sector-specific ETFs? Share some of those go-tos that you're relying on to build long-term wealth. I hope you enjoyed this video. Make sure to like, subscribe, hit that notification bell. Hype this video. Check out some of my older videos when I started sharing my journey into investing into the S&P 500. I first started investing into FXAIX back in September of 2023, fleeing empowerment where I was in a target dated fund with 0.93% expense ratio. At that time, I brung over about $126,000, which I had to get invested over at Fidelity. I didn't put it all into FXAIX. There's some other individual stocks in that portfolio. And now here we are in 2026, and that portfolio's value is nearly $190,000. Before we wrap up, I decided to put my exact portfolio value into the investment calculator, $189,652. What is this on track to grow to in the next 10 years? 10% rate of return just by me holding, not adding any additional contributions. This could grow to $492,000. I want this for all of us in our retirement accounts, in our taxable brokerage accounts. No excuses. Start where you are. Stay invested. Your employer doesn't have a 401k? Contact a brokerage company and open your own Roth IRA. Don't have much to invest? Invest whatever amount you have. Fractional shares exist and allow us to build our portfolio with just a few dollars at a time. Whatever you're thinking, don't let it hold you back. Okay, I am Lisa J. Stocks. Thanks for watching. Okay, bye.